Joining us to unpack the opportunities and challenges and future outlook of this critical sector is Ebei Ehiemoike. He's the Managing Director of Leasing Finance Company of Nigeria, a subsidiary of the Bank of Industry. That's Leasing Company of Nigeria. Great to have you on the show. Good morning.
Good morning. It's great to be here.
Fantastic. So, as Nigeria's pioneer leasing institution, how is Leasing Finance Company shaping the future of assets, access and business growth? We know most companies they struggle with having to acquire some of these assets that they need for their business because they're really very expensive.
Thank you. Now, Leasing Finance Company Limited is redefining how Nigerian businesses access productive assets by making leasing a practical, affordable, and very sustainable financing solution. Now, we combine deep sector knowledge, pure sector knowledge, and our impact mandate to bridge the gap between businesses and the equipment that they need. The truth is, the future is asset light. And a smart lease would always turn an idle idea into a very productive enterprise. Now, our leasing model empowers businesses to acquire essential assets without the burden of upfront capital or long-term debt. And what that means is that it properly positions the businesses, our clients' businesses, to scale up very quickly in a sustainable manner. And that also flows from our clear, deep sector knowledge. Leasing is the oldest leasing company in Nigeria. And we've gathered a lot of experience over the years and have created a niche in the market. It's also a plus for us being a subsidiary of the Bank of Industry because we have the added advantage of being able to offer facilities at very competitive rates that are unmatched by commercial banks. We also have the edge of tenure. We also offer longer tenures than other lenders can offer, largely free from our source of funds and our cost of funds. Because we have deep sector knowledge, we also offer bespoke product offerings to our customers. These are offerings that are aligned to the needs of each of the sectors of these customers. And we also offer flexible finance. What's critical is ensuring that the customers get products, facilities that are given to them that would align with their cash flow. What that means is that we are an active partner in helping this, a strategic growth partner, really, in helping our customers scale up from being little micro enterprises to being large enterprises.
And definitely in a high inflation, that's high interest rate environment, definitely, and that's to battle inflation. We've seen central bankers, globally try to raise inflation. Some are winning battles, some are not at this point. And talking about lenders, what unique value does Leasing bring to the market, compared to commercial lenders, because they have to charge a lot, to lend money to businesses?
Okay, now what we bring to the market, different from traditional lenders, is practical flexibility as a leasing partner. Now, the essence of a lease. The beauty of a lease is a smart lease turns an idle idea into a productive enterprise. Now, because what we are bringing are best products aligned to what the customers need, purely tailored leasing structures. Now, what we do is, apart from giving all those benefits that I had earlier mentioned, as a matter of fact, I think some of our customers would actually say that our greatest niche would be the interest rates. Because right now, the lending rate in the market vacillates between 25 to about 30%. And that will be on interest rates, not even the fees. And you really can't blame those lenders because it flows from their source of funds and their cost of funds. Now, we also provide that flexible, practical flexibility, as I had earlier mentioned, because apart from the rates, we also help customers manage their cash flow needs. The beauty of a lease, as opposed to a credit, is that the lease allows you go away from the traditional lending model of you taking in your cash and putting it all in to buy an asset. It ensures that the asset doesn't, even in most cases, sit on your book. So you have tax benefits from that asset. The asset sits elsewhere. We manage your risk. We manage the challenges you have. The customers would not have to come in and put in a lot of capital. Capital as in like the equity contribution. A lease also offers flexibility concerning collateral, because the lease itself is the main collateral, is the main security for that facility. And because what a lease is structured around assets, that's largely what we finance, assets. Now, because of assets are productive assets, what that means is you also have a clear way out of the payment of those, of the lease, because the assets actually ensure that the facility is paid down. So in essence, it takes the financial capital pressures off the customer. The customer has a cash flow to run their operations. The customer has assets that they do not necessarily need to keep at the end of that tenure. They have access to top-notch assets. What that means is, because the innovation circles right now is quite short, if there's a better technology that comes up along the line, the customer has the flexibility of, at the end of the lease period, not keeping those assets, but moving another lease into the more current assets. What that means is they're not tying down their capital. All in all, it's a fantastic deal for the customer, because the customer moves away from the traditional model of doing business and moves clearly into a fast-paced way of doing business, a partnership, a strategic collaborative partnership that ensures that their business scales up ultimately. And at the end of the day, it also trickles back into the nation. It helps the nation and really stabilizes things all around.
All right, so let's imagine, I'm a business now. I'm in the printing industry, and I'm trying to buy this massive, printing machine that costs about maybe 50 million or more. So I come to you now and I say, I want to buy this equipment, but I don't have the capital, so I'm going to lease it. How does it work?
So there are two basic types of leases. There's an operating lease and there's a finance lease. We also have some other lease variants, like a leveraged lease, a synthetic lease, and a sale and lease back. Now, so typically how this would work is we would offer you either an operating lease or a finance lease, depending on what you ultimately desire or require. If you intend to, at the end of the lease process, own that asset, it will be a finance lease. If you don't intend to own that asset, it will be an operating lease. Now, if it's a finance lease, it means that at the end of the tenure of the facility, which would run typically from about 4 years, 5 years, the product eventually becomes yours. But even then, until then, we help you manage the risk aspect concerning depreciation, so it won't typically impact your books directly. For an operating lease, you're merely saying, I want to use this asset. What that means is that the risk concerning the ownership of that asset stays with us. The maintenance, management of that asset stays with us. For a finance lease, it stays with you. So the starting point will be, what kind of lease do you need? What do you desire? Now, depending on the kind of sector that you belong in, some sectors are very innovative intensive. That means that, for example, like manufacturing, that means that the equipment, the machines needed, they would quickly change in line with innovation in that space. So to ensure that you are constantly at the cutting edge of competition, if you operate in that space, you would need to opt for an operating lease, such that you would not be looking at acquiring assets, but usage of assets in a productive form that would ensure that your profitability is always achieved.
All right, and definitely, let's look at technology now and innovation. With rapid technological change, how does leasing help businesses stay competitive without being weighed down by obsolete equipment? And does leasing make it easier for companies to upgrade regularly if you're trying to upgrade that a little machine there to make it stronger or something more current?
Absolutely, it does. Now, Nigerians typically have this idea of wanting to own assets. So a person will go out there, he doesn't want to lease a vehicle, he wants to own it.
Yeah, you feel more secure when you own it, right?
Sorry?
You feel more secure when you own it.
Absolutely. They feel insecure. However, when you're running a business, a productive business, you also need to be careful with your capital, particularly when you are young, you are small, and you are scaling up. The wise choice around running your business is avoiding putting a lot of investment in capital intensive equipment and stuff like that. So at the end, so really it would be better, a better model for you to go, particularly in the IT space. IT is extremely fast. The innovation circles are so short that it's mind-blowing. It doesn't make sense for you to put in a lot of your investment in in a lot of equipment that would stay for, because really it will become outdated. Servers, equipment, machines to keep at the cutting edge. And by the time you actually go in and buy through a finance lease, those kind of assets, it ties down your capital. Now, what that means is that you are back to another lender to borrow working capital to run your business. Because don't forget, an equipment itself does not pay facility back. The equipment is there, but you still need funds to power it to pay facility back. It's akin to somebody, let's say now with our electricity supply, and you say you want to use light from the mains. That works. But you might decide that you want to go green. The world has gone cleaner, cleaner energy. Nigeria has been in the space of the year of, gas for a while. And you say you want to buy, let's say, you want to power your energy in your office through, let's say, gas turbines or even a gas generator. Now, the cost of installing those equipment, buying those equipment, it's huge. And that's a sunken cost. But once you get past that cost, you would earn the benefits of it. Now, the question is, are you big enough to have that capital to sink it in to that initial investment? It might not be very practical, particularly if you want to scale up. And businesses also need to be careful, particularly in the IT and the innovation space, to avoid holding on to assets that they can't do much with. Because when you need to sell those assets, if eventually you go through that, you get, let's say, finance lease, and then you eventually own those assets. The challenge with holding those assets is, do we have a ripe second-hand market to sell those assets in the country? At the end of the day, you would lose a lot of money trying to sell them off, particularly because the depreciation would have hit it very badly and it will be seriously discounted. So leasing is the best solution for a technology or innovation intense segment like IT.
And does it help, talking about, going green at this point, does it help businesses, go green? Keep talking about ESG at this point.
Absolutely. The federal government has been clear on the fact that, ESG is closely linked to climate, also even like EV vehicles, CNG, gas, it's all, the environmental sustainability, it's very critical. And the truth is, that's also a fast-moving space. It's also a green space because we really haven't done a lot in Nigeria in that space. And that's why the government has given a lot of concessions. If one is bringing in equipment, machinery, that's like, let's say it's gas linked, CNG linked, EV, that's electric vehicle linked, largely in that ESG space. And the wisest thing to do actually is to lease those equipment. Why? Because technology is moving very quickly. Electric vehicles are new, CNG powered vehicles are new, at least in Nigeria and even in the world. So even as modernization happens, innovation happens in that space, it's smarter not to invest your funds totally in that space. It's best to lease it so that when you are done using those kind of equipment, assets, you can let them out. However, that's for spaces that are very fast moving. If you operate in an industry or a segment where the turnover or the turnaround of your equipment is not that high, it's smarter for you to actually get a finance lease. Because that way, at the end of the tenure, you actually keep your assets. And that also helps also. So that's also the flip side of ESG. Because there will be a reduction in over-circulation of these assets. The assets' lifespan will become longer by keeping them on, then it's better for you to actually keep on those assets. What that means is you'll be done with that lease. You would not have to pay again for any other lease. The asset is yours and you can keep it on. So what's critical is what sector are you playing in and how does the lease align with your needs? And that's where Lecon comes in. Because we provide bespoke offerings, it's not a one cap fits all. What that means is we would work with you, we would understand your space, what you need to get done, and provide a kind of lease that would typically help and drive your business and move it forward. We have 6 focal areas that we largely are focused on, and that's agro-processing and food, mining and solid minerals, climate change, that's renewable energy, gender, which is a very big piece for us, healthcare and petrochemicals, telecoms and ICT. And on the gender level, I should also mention that supporting women isn't just a social goal, it's actually smart economics. That's the truth. We provide a level playing ground for women businesses. That's businesses that are either owned by women or are run by women. It's one of our 6 focal areas. I should also mention agro and food processing. The agric sector is the largest employer of labor in the country, and it's largely manual, it's not mechanized. And that's largely because the farmers are not aware of what a lease can do for them, the opportunities inherent in getting a lease. Most of them are largely unstructured. They're largely uneducated. So even if you ask them for financials or evidence of what they've done, they really don't have that information. What we do, apart from providing leads, we also provide some capacity building. So we handhold them, we help structure them so that we point them in the right direction to help them grow. Right. For us, it's critical. We're not focused on just profitability, but also impact. Impact concerning ensuring that the businesses scale up, that there's job creation, and there's largely sustainability.
Fantastic. I guess, definitely we're gunning for positive, externalities, not just profits at this point. Well, thank you so much. A lot to unpack there, and definitely I wish you the very best in your endeavors there. Thank you so much for joining us. Ebehi Moike is the Managing Director, CEO, Lecon Finance Company. Thank you for coming on today.
Thank you very much for having me.